What's up, everybody? So I just did a video on MicroStrategy. Haven't heard of this company before I did the video. So it's really interesting. It's kind of like a Bitcoin play because the company has been buying Bitcoin since 2020. That's not their business model, but I read that they weren't receiving the quags. What's up? Receiving a good return on their cash, which doesn't really make sense to me. Maybe let's be some articles. The ticker is Mr. MSTR. Yeah, MSTR, Mr. Has anybody heard of the stock? I mean, it's up like 600% in the past year. So here's a look at the stock price the past 5 years. It was it looks like it doesn't split. It was $100 in 2020. Look how flat the line is. Come on. There's so much stuff going on. I wish they made it easier to read these screens. And now it's 1782. They just don't split, I guess. But if you look at Bitcoin, I'll put Bitcoin in red. Look how like they move together. They're very correlated, not perfectly correlated. Like it looks like they were extremely correlated for 5 years, right until like a month ago. This stock just shot up because it pretty much moves in unison with Bitcoin. I mean, this stock did go up a little bit more than Bitcoin in the beginning of 2021, but then it reverted back to Bitcoin's price. You can see here, and it moves outside of Bitcoin's range, but I mean it follows it in a pretty steady line. Because if you did like crude oil, I'm just gonna pick something. I bet you there's no correlation with crude oil. We'll put it in purple. Well, it's not too far off. I thought it'd be a lot different, but crude oil is much more a little more static, right? Bitcoin, it moves a little more than oil. So it's kind of interesting, right? Yes, it's a decent short now. I was thinking that. That's exactly what I was thinking. I wish I could get rid of the let me fix this. This is really annoying. Okay, let me get rid of that oil line. Yeah, because if you look in the past year, Bitcoin is up 140% in the year, which is good. I mean, it's really good. 140%. Could you imagine putting $10,000 and a year later you have $24,000? I mean, 20% growth in a year on any investment's a good year. So 140 is great, but I mean, this stock went up 650%. And I don't know exactly why. I'd like to try to figure this out. Like, what the thing with because I was when I was doing Berkshire a few weeks ago, and I was showing Berkshire holdings, and someone said, and Berkshire has a lot of like railroads, utilities, And someone mentioned, and Scott doesn't like to invest in commodities. There's a difference between investing in commodities and investing in commodity stocks. Because I generally don't invest. I have, but I generally don't invest in like GLD, the commodity GLD. But I will invest in a company that maybe mines gold or sells gold. Well, I would consider it a buy. I guess it's a little overvalued now, but like for a long-term play, I think it's a good buy. Yeah, but it may not be the best time to buy it. But if you're holding it like 10 plus years, then I think it's a buy. But if you're kind of like, you generally don't hold stocks for too long, yeah, it might be a little overvalued now. Let's see, MicroStrategy. Let's see if there's any news articles that talk about why they bought so much Bitcoin. Because they started in 2020. So MicroStrategy buys Bitcoin. I want to find that article where they talk about why they initially bought it. It was in 2020 when they started buying it. And they've been buying a lot. Like they issued like $1 billion of debt in 2023 and used that to buy Bitcoin. Okay, here it is. Oh, maybe it was Wikipedia. I saw the article. I don't think I could. It's Bloomberg. I don't think I could read the article. Okay, let's see if they started buying Bitcoin in 2020 as an inflation hedge. Okay, it was an alternative to cash. Okay, I see. I couldn't remember what he said relative to cash. Okay, so instead of holding on cash, because a lot of companies, a lot of new companies have a lot of excess cash because they IPO or they issue debt, and they need a lot of cash on hand because they burn cash in the first few years, so to run their business. Hopefully, they don't have to keep raising cash, but some companies do. So they need to do something with the cash. A lot of companies just invest in commercial paper, corporate bonds, really, really low risk, low yield, very low interest rate investments. He was buying Bitcoin, but they're not like a Bitcoin, a mining company. So that's not what they do. But I guess he just had a hunch. I mean, I'll show you what they do. I think when you start your due diligence on a company, or at least I'll tell you what I do when I start my due diligence on a company, especially a company I'm not too familiar with. Even if it's a company you're familiar with, like a company like Coca-Cola, I mentioned this before. Like, I'm sure you probably think you know how they make money, but I bet you that's not how they don't make. The way they make revenue is not how you think. They don't really sell soda. They don't sell cola. They don't sell soft drinks, actually. They do sell some Coca-Cola, but that's not really how they make their money. So it's probably good to at least. So the two things I do when I look at a company, whether I know the company's history or not, regardless if I've heard of them or not, I do two things. I go to a page like Wikipedia because it just can give me a high level knowledge. And of course, I go to the company's page because I just want to understand what they do on a high level, like how long they've been around, who runs the companies, have there's been any changes in management. Usually, Wikipedia kind of summarizes stuff pretty well, and also kind of some high level history of the company, like. When they started, what did they do when they started? Have they changed the acquisitions? And then And then I want to just understand how they generate revenue. So usually, and I do that in my videos. Like when I look at the income statement, you can see how much their revenue is, but then I drill down to understand how they actually make money. Because a lot of companies, like if I was to ask the average person, like how does Facebook or Meta, how do they make money? Some people might not really even know, but it's mostly ad space, just selling advertising space on the platform. It's like 99% of their revenue. But MicroStrategy has nothing to do with, they're not like a Bitcoin company. They just bought some, I guess, an investment. What matters is how many of those Bitcoin are unburdened when compared to their overall debt. Yeah, McDonald's, yeah, they're like the biggest owner of real estate, which is just a sweetener because they sell a ton of food products and beverages, like an unbelievable amount, and they have such a great brand name. But on top of that, they own a lot of real estate. But actually, McDonald's does not make any money from selling burgers. They zero, because they don't own one McDonald's. It's all franchised out. Every single McDonald's store is franchised out. So somebody's selling burgers and making revenue off those burgers. But they pay McDonald's, I think it's 7% royalty. I don't know the royalty exactly. So McDonald's revenue is royalties. Starbucks, on the other hand, sells a ton of coffee because they own, there's no franchises. Starbucks owns every single location. They have a different business model. Yeah, so MicroStrategy is a software company. I know they do cloud software, and I think Simply Wall Street probably explains it well, if you understand. They have some ties into AI, so maybe that's pushing up the stock price even more. They provide AI-powered enterprise analytics software and services around the world. It has apps, MicroStrategy One, which provides users with the ability to directly access novel and actionable insights for decision making. I wish they would dumb it down a little bit. It doesn't really, the way they explain things. Okay, and they do a lot of work with the U.S. government. MicroStrategy Cloud for government services. So governmental agencies, they use their program, and it offers on-threat monitoring that meets rigorous technical and regulatory needs for government and financial institutions. They have another app, MicroStrategy Support, that helps customers achieve their system availability and usage goals through highly responsive troubleshooting and assistance. So I don't know if it explains it that well, actually. So in August 2020, 250 million in Bitcoin they bought. It's a lot of Bitcoin, right? As just a reserve asset. They cited declining returns from cash, because cash, you can't get that great a return, maybe like 2, 3, 4%. And in 2020, it was probably under 1% because rates were really low back then. Now you can get a good return on cash. A weakening dollar and other macroeconomic factors. Okay, and they made more Bitcoin purchases. They have actually two companies. Well, the MicroStrategy is their main parent company, and they have a subsidiary named MicroStrategy that just buys Bitcoin. I think the 10K shows a little better. Okay, here we go. No, that's not it. I thought it. Okay, here it is. Here it is. Okay. So throughout 2022 and 2023, we used proceeds from capital raises. So capital raise means when a company sells stock. That's the one way to raise capital is you sell stock, you dilute your shareholders. The other way is to issue debt. So capital raises is to issue equity and debt. And we all know what equity is. It's stuff we buy. It's common stock. And debt is just like some type of debt instrument. Like long-term debt is the most common, or you can do convertible debt. So instead of like using the capital to grow their business, they use it to buy Bitcoin. Kind of an interesting thing. You're beating the crap out of that keyboard. I know. I've always done that. I always hit it really hard. So the company MicroStrategy, which is their public company, has 16,000 Bitcoins. And what's the price of Bitcoin? Because it's going up a lot, because when this report, this is their 10K from 12/31. So Bitcoin has gone up a lot since the end of 66,000. So it's 1 billion in Bitcoin, but they have a subsidiary, MicroStrategy, which owns 173,000 Bitcoin. So most of the Bitcoin is with their subsidiary company. I think that's just a shell company. It's a private company. I don't think it does anything but buy Bitcoin. And that company has 11.4 billion of Bitcoin. And MicroStrategy's market cap is 30 billion. So they have like 12.5 billion of Bitcoin, and market cap is 30 billion. So I think people have caught on to this company's because it tripled since the beginning of the year. In the beginning of the year, it was 700. Well, not quadrupled, but so it was about 12 billion in market cap in the beginning of the year. I mean, but the Bitcoin holdings alone are 12.5 billion. So of course the stock price had to shoot up. But I guess it's kind of a Bitcoin play. Like if you knew Bitcoin was going to go up so much, then you could have bought this stock. But then how would you know Bitcoin would go up? Just by Bitcoin. You can't really predict these prices. Yeah, they probably use a company as a conduit. There's probably a parent company attached to it. So yeah, so MicroStrategy is the public arm. MicroStrategy is just a shell company that just buys Bitcoin. I don't think they do anything else because they have a ton of Bitcoin, 11 billion of Bitcoin. That's a lot of freaking money in Bitcoin. And this was this is their 10K, which was as of the end of 2023. So that their holdings were only 680 million. Now it's doubled because Bitcoin doubled. since 12/31. It says here that the price of Bitcoin at the end of 2023 was 42K, and now it's 66K. So it's gone up 50%. And actually, they have debt. They have a 2028 secured notes. Which is $500 million. Okay, here they have their debt. This is their long-term debt, $2.2 billion. So $640 million is due next year. $1 billion is due in 3 years, and $500 million is due in 2028. So this $490 million 2028 secured notes, what do you think it's secured by? Of course, Bitcoin. Because when you issue secured debt, you pay a lot lower interest rate than unsecured debt. So you would rather pay lower interest rate, right? So wait a second. So they pay 6.25%. So not too low, but it probably would be higher if it was unsecured. Okay, yeah. The 2028 notes are secured on a senior secured basis. The collateral, okay, here it is. The collateral that secures the debt is Bitcoin or other digital assets acquired by the company on or after June 2021. But excludes Bitcoin held by MicroStrategy. By MicroStrategy. So MicroStrategy is kind of like shielded from that from the collateral. So they can't. So if they were to default on that debt, the holder of the debt can't go after MicroStrategy according to the terms. It can't go after MicroStrategy, which is the entity that holds most of the Bitcoin. It could go after MicroStrategy, which does have 1 billion of Bitcoin, enough to pay off the debt. But excludes Bitcoins held by MicroStrategy and certain other excluded assets. As of December 31st, 2023, 16,000 of the Bitcoins held by the company serve as collateral. So the 16,000 Bitcoin held by MicroStrategy, which we talked about earlier, are collateralized this loan. So it just means, like your mortgage, if you have a mortgage in your home, that's collateralized. Your home is collateral for the loan. So if you do not pay the loan, the bank takes your home. That's all it means. So if they do not pay the loan, the holder of the loan takes the Bitcoin. That's collateral. They have 6.9 billion in Bitcoin. Is currently valued at 14 billion. They're raising another 525 million now to purchase more. Yeah, so they're buying more. So it's a pure Bitcoin play, but they're a company too. So they do generate money. So if they could possibly because when you buy the gold, the ETF GLD gold, it's your if you make money or lose money, it's really predicated on the price of gold, and that's it. But if you buy a company that sells gold, like they sell jewelry, you may make money if even gold prices don't go up because the company sells a product. They do have $500 million of revenue. I mean, it's been $500 million for like a decade now, since like 20. 13. It's been 500 million. It's not really going up. I'm not sure why they can't increase their revenue, but they license some of their software. That's going down. It was 100 million in 2021. Now it's 75 million. Subscriptions, they have a few apps. That's gone up a lot. It was 43 million. Now it's 81 million. Product support is their biggest revenue generator. That's about half their revenue, 260 million product support. And they have good margins. Revenue 500 million, cost of revenue 100 million. So gross profit 386 million. So good margins. Collateral, which nobody will force them to sell even during the worst of the 4-year cycle. Well, if they don't pay if say a bank issued the debt, say it was the bank, if they don't pay, the principal and interest payments of that debt, the bank will take the Bitcoin. There's no other. It doesn't matter what price Bitcoin is, the bank will take it and sell it because they want to recoup as much as they can. And that's the collateral that backs and banks aren't investors. They're not looking to try to time the market. Just like if they took your home, they just want to sell your home. They're not looking to kind of like wait for the housing market to recover. They want to sell your home and try to recoup as much as they can, and hopefully not lose any money. But yeah, let me know if there's a ticker anybody wants me to look at. We can do a DCF on. So I'm not 100% clear on like the products that they offer. I know it's apps. I know they mentioned AI. Product licenses. Okay. They sell different types of business intelligence software. Licensed on a term or perpetual basis and installed either on premises. So I guess they license their software to different companies, and those companies either use software or maybe sell it to someone else, like repackage it as part of their product. Although product licenses are sold with product support, the software is fully functional at the outset of the arrangement is considered a distinct performance obligation. Yeah, they do make a lot of money on product support. Revenue from product license sales is recognized when control of the license is transferred to the customer. The company may also, they can make more money reloading with a recoup. Banks like to be liquid when they can. So NextEra, NEE, NextEra, right? NextEra or NextEra Energy. That's gone up a lot, right, lately? This seems like a pretty good company. It's 7.8. Okay. NextEra Energy. Does anybody follow this stock? It's done really well, right? In the past. Oh, it's down. I thought it was. It's down a lot. It's down like 30% in the past, since December 21, December 22. So the past 15 months. NextEra. Okay, so I can't. They have negative free cash flow every year, so I can't. I got to do my alternative model. NextEra. I know some people that work at NextEra. Oh, they do have positive free cash flow in 2023. The forecast is for them to have negative. Okay, pretty good revenue growth. Okay. Let's see. They're 2020. Okay, 28, 30, 34. Remember like in 2018 through 2022, it was all about whatever company was in alternative green energy, like those companies like Tesla, any company that was getting away from oil was like their stocks were going through the roof. Everybody wanted those stocks. Now nobody even cares about that anymore. It's all about AI. Future fuel to you. Oh yeah, you did. Yeah, I can't believe a special dividend. That blows my mind that they can offer a special dividend. I got to look at that. I would never think they can afford a special dividend. It's a little hard to predict what they're in the regulated electric industry, utilities. Well, being cash rich is one thing, but because they have I thought they have pretty extensive cash burn. So you have to have you have to have a lot of cash flow coming in to give a special dividend, because you need to keep the cash in house because until you make a profit. But I guess they are making a profit if they give a special dividend. Yeah, it seems overvalued still, but it's a bit tricky to value, since they just had positive free cash flow in 2023, but negative before that. It's hard to know like what their margins will be. Yeah, it is like utility stock trades like a tech stock. They have they're a little more advanced than a traditional utility company. They do a lot more. Okay. It is the world's largest electric utility holding company by market cap. Okay. So yeah, it kind of like it supports a lot of people live in Florida, get their electric get their electricity from this company. Half of Florida, and is a third largest utility company in the United States. So they power half of Florida, and they're third largest in the U.S. But they do other things besides traditional regulated electricity. They have does anybody know about? I have to reread to kind of bring myself up to speed. Okay, 2018, they acquired Gulf Power, the largest electricity producer in Florida, for $6 billion. But they do other things. Like, what are the environmental issues? NextEra Energy. Yeah. Let me know. Does anybody know about NextEra? What other kind of, besides electric, don't they do some other kind of innovative things with alternative energy? Do they? I think they may do commodity trading, but I have to really. Actually, my friend just left NextEra, but I know someone else who works at NextEra. I guess they do wind power. But it's amazing how things change, right? It was all about, these companies in the green, sustainable energy industry for so many years, and now nobody cares about that. Yeah, sometimes the presentations give you a little more insight. Okay, so this was we develop, construct, and operate power projects to produce electricity. We market electricity to wholesale customers and invest in critical infrastructure for power delivery. We also offer a variety of energy-related products and services to customers across the country. It's kind of high level. Regulated. Would you mind going through the numbers on ET? ET. Yep. That's one of my better investments. I'm up about 70% on ET. ET is a midstream oil and gas company. They mainly transport oil and natural gas, NGL, natural gas liquids, LNG, liquefied natural gas. Lots of acronyms, but they are different things. From the upstream company to the downstream company. Does anybody... $15.34.52. I kind of go off on these tangents explaining these things, but I don't know if people like it or it's just a lot of noise. 5.9, 6.4, 7.1. They're always so undervalued, ET. And do you know, I don't know why they always appear so undervalued every time I do the... I'm giving them the highest whack, which makes my prediction even lower, just to try to be as conservative as possible. So even in an ultra conservative, you can see the whack is between 9.5 and 11.3. So if I still 30% undervalued, and they pay like a 7% dividend. It's an MLP, an 8% dividend. It's an MLP, a master limited partnership. Do you own this stock? I own it. So you get a K1 each year. I keep all my stocks, like my cost basis. So I'm at 864. I can't. I didn't write down when I bought it. I don't know why, but 864. Trying to think. Oh, it was in the beginning of January 2022 is when I sold my business at the end of 2021, and so in January I bought a lot of stock in different companies. Yeah, so it was right here. Yeah, so January 2021. No, it was January 2022. It couldn't have been 2021. Yeah, 2022. What did I say? Okay, so January 2022. So I'm about 2 years in. So I'm up about 80%, I believe. And then I've been getting like probably 15% of dividends, so I'm probably up close to 100. I think it's a good long-term play. I'm at 864. What's it currently at? Should I bring up my portfolio? I could show you my cost basis. because that's in my portfolio. If you guys want to bring it up, let me know. Okay, so now I'm going to go off on a tangent. So if you guys don't like to hear me talk, so this is I mean, I mainly do these tangents. It helps me kind of like it helps me like understand things better if I explain it. So downstream, midstream, and upstream is kind of a term used for many different industries. It's not like an oil and gas term, but it's but I think it's most common in oil and gas. But the actually, I think it'll I think okay, it'll make more sense. So if you want to understand what these companies do, okay, steps. So this is how I think of it. Okay, type of company. And I've seen cannabis companies also explain this way too. So upstream is the very beginning of the oil and gas production process. This next step is midstream. The last step is downstream. So let's see. Does anybody know any upstream oil and gas companies? Let me know if. Do you guys know? It's the very first step of the oil and production process. So it's a it's the most risky part of the oil and production process. So if you invest in an upstream company that's successful, you can make a lot of money. You could 50x your investment. It's hard to find that, but because a company can spend a lot of money trying to extract oil from the ground and not extract much or not extract any. And it's very expensive to pull oil from the ground. Let's see. Now you all know upstream companies. They're like the names we all heard of. Midstream is not like Shell, BP, Chevron, Exxon. These are like the big players of the oil and production process. Occidental is definitely upstream. I'm not sure why they're not on this list. Let me show you. But in order to be an upstream company, you need a lot of money. You don't need as much money to be a midstream and downstream. You do need a lot of money though, but not nearly as much. You need a ton of money to get started. So they're not called upstream, at least on the industry. It's called E&P, exploration and production. And downstream is refining and marketing. So E&P let me just let me download it. It'll be easy to see the whole name. Okay, I guess this makes it a little more confusing. Like I say one thing and then I contradict myself. The big massive companies, they're usually put into a different category because they don't. The Exxons of the world, they're called integrated oil and gas companies because they do so much. They do upstream, downstream. They do everything. They're every part of the oil and production process. What the fuck? Okay, I'll just do it on the screen. Okay, Exxon, 450 billion market cap, but they call them integrated because they do so much. Chevron, Total Energies, that's the French company. BP, the British company. Sunoco, Imperial, Synovus, NFG. What the hell is NFG? National Fuel Services. So yes, because some companies do so many different things. So E&P is like a straight upstream company. Like they don't do anything else but pull oil from the ground. Hey, Chris. So the companies that are straight upstream, ConocoPhillips is the biggest, 145 billion market cap. Canadian Natural Resources, EOG, Pioneer, Occidental, 56 billion. Hess. I mean, Hess also does midstream, but they have a separate entity. It's a public company called, I think it's called Hess Midstream. Woodside. So these companies are strictly upstream companies. They pull oil from the ground. Most of these integrated companies do everything: upstream, midstream, downstream. That's why they're in a different industry. Okay, so upstream companies are the very beginning of the oil and production process. They actually pull the oil from the ground, from the rock, from the sand, from whatever source that oil is. And that's a very expensive and long process. And it's a more volatile industry. There's a lot of junior mining companies. I don't know if you heard that term, junior miner. These are companies they usually have a really low market cap, like under $1 billion, like 50 million, 60 million, 200 million. their whole like Woodside, WTI, they go public, these companies, W&T Offshore, like they raise a few $100 million, and their sole purpose is they identify a location that potentially has oil, and they use the $400 million from the IPO to extract oil from the ground. And if they're successful, the stock will go up a lot, and the company will probably be acquired by a larger entity like Exxon. Okay. They're really risky junior miners, because probably like 95% of them go out of business without making any money. The senior miners are the ones that are making all the money, that have, decades of experience and a lot of capital. But let's just keep. Actually, I think short Core Energy. I actually have this in my notes. Okay. I wrote this in my notes in my Excel file. So E&P stands for exploration and production. Which is the early stage of the energy production process. This includes searching and extracting oil and gas. So not only do they have to find the location that potentially could have oil and gas, they have to then drill in the ground, build these crazy contraptions to figure out how to get the oil out of the ground, and hopefully there's enough. And there's been a lot of advancements in oil production. But let me just try to finish this before I go into the next topic. The midstream companies are the safest companies to invest in, because they just move the oil from the upstream to the downstream. And this company, Energy Transfer, most of the way they transport oil is pipeline. They'll build a pipeline from one location to another, and that's how they move the oil, because it's really hard to move it by truck or train. Pipeline is the most efficient way. Schlumberger does it for big companies, right? Yes. Schlumberger is also in the industry. So the midstream, there's a lot less risk. If oil prices go up or down a lot, their stock won't move nearly as much, because they have contracts in place with the upstream companies to deliver the oil to the downstream companies. So pipeline is the most common if you're in a landlocked country. Like if you transport oil within the U.S., it's most likely pipeline. I think like 90% of the oil is transported through pipeline. If you're delivering oil across the ocean, then it has to be by vessel. You can't do it by pipeline. You could, of course, do it by railroad. If it's maybe from Canada to US, you can use railroad or truck, or you could probably even use pipeline too. you know, you can't fit as much on a truck as you could on a railroad. And you can't, it's not like delivering water from one location to another, delivering natural gas, oil. The pipeline has to be able to handle the product. So you can't, it's a little more complicated. That's why it's a little more expensive to transport oil by vessel than to transport like furniture by vessel, because it's just a little more challenging. The downstream companies are you could think of the downstream, if it makes it easy for you to remember, because this is how I initially remembered it, is that I'm close to the downstream, because when I get the oil, when I put in my car, it's right after the downstream company does their work. So it goes from upstream to midstream to downstream, and the downstream companies I want to make sure I'm saying the terms right. Yeah. It's mainly like refining it. Yeah, midstream refers to points in oil production process that falls between upstream and downstream. Midstream also includes storage. I didn't say that because sometimes an upstream company wants to deliver like 100,000 gallons to the downstream company, but maybe 50,000 gallons this week and 50,000 gallons next week. So the midstream company has to store the oil and natural gas as well. And that's not easy to do, to store that type of commodity. Storing gold is a lot easier than storing oil. I'm sure you can understand why. But the downstream is a refining process. So usually the oil is useless, because when you pull oil from the ground, it's a useless thing. I don't know if you could like when you pull the cocoa bean from the ground, it doesn't taste good. You can't eat it. It's disgusting. It's bitter. So it's a useless thing. The cocoa bean pulling from the ground. Same thing to oil. It's useless. You can't use it for anything. It has to be refined, which is a very different. It's not an easy process. You can't just pour some sugar in it, like the cocoa bean. Yeah, some sugar and whatever they do to make it sweeter and taste better. Maybe they have different grades. They have the 90%, which is the dark chocolate. Then you have the 50%, which is the milk sweet chocolate. But to refine oil or natural gas liquids, it's a difficult process. So you take this oil from the ground and you refine it, and some of it turns into gas for your car. It all has a different formula. And then certain oil, it's the same oil, the basic oil, you take that and you add different ingredients to it, and then you make it into jet fuel, which is a lot different than the oil I put in my car. It still starts from the same original commodity from the ground. Just like that cocoa bean, the same exact bean from the ground, they turn it into dark chocolate, milk chocolate. They turn it into different food products. But yeah, so it's and some of the oil is used to make like plastics or a ton of stuff. The list goes on and on. So it has to be refined in the downstream part, and then the downstream part eventually gets to us to put into our car. I just wanted to explain it because it helps me remember it better if I explain it. But I could just bring up a chart. And read off the chart, which I will do now. because I'm sure yeah. So you can see the upstream. How do they pull from the ground? There's a few ways. They use these rigs, and these levers go into the ground, breaking the rock. And they have advanced the technology a lot. Now they do like fracking. Does anybody ever heard of fracking? I don't know if this is a brand new thing, but I know it's fairly new. It's just that you shoot water, because normally you would just break the rock, like kind of levers to go through the ground and break the rock. And then you pull up rock, and you pull up debris, you pull up a lot of garbage, and then you process all that stuff and strip out the oil. So a lot of the stuff you pull from the ground, you don't ever use. You just throw it away. But fracking, it's kind of like a process where you shoot water really, really fast, and it helps to break up the rock and everything. Hydraulic fracturing or fracking is a drilling method used to extract petroleum or natural gas from deep in the planet. In the fracking process, cracks in and below Earth's surface are opened and widened by injecting water, chemicals, and sand at high pressure. So, like if you try to get graffiti off a building, you might see someone with a hose. You've probably seen this before, right? Like you would see someone with a hose, and the water breaks up the paint, right? Because you can't just rub a brick wall with a paper towel. You have to use high pressure water to break the paint pieces, and eventually, little by little, paint breaks off. So fracking is the same idea. Is you just use high pressure water and other things, not just water. But I think it's the pressure of the liquid that breaks the rock up, and it helps them extract water better. What's the other term? What's that term? When like they used to like have to go into the ground to pull the oil, but in the past, like maybe 30, 40 years ago, they could only go straight down into the ground. But now they have this new technology where they can go left and right when they hit beneath the ground. Let me go. I can't remember the name of the term. Horizontal drilling. I guess it's that simple. Because for a long time, they could only drill down. So you can only get oil that's beneath that particular location. But if it was a little to the left, a little to the right, in the past, they wouldn't have been able to even find it. Now, it's gotten much more advanced where they are able to go down, then left and right. You can see how beneficial that can be than just going straight down. Because if this is where all the oil is, and if you just go straight down, you can only access maybe this area. But now when you go left and right, you can access the full area that has the oil. Horizontal drilling. It's just horizontal drilling. It wasn't even a term. I'm thinking of like a specialized term. Yeah, horizontal drilling. So these kind of advances have really, really upped the game and made it easier to extract. But I mean, the real reason we don't depend on, because even in the 90s, we were so dependent on the Middle Eastern oil, but now we have shale and which is, and other ways we get oil. We now produce more oil than like any other country. We used to have to so much rely on the Middle East or Russia. Now we're like the number one in producing. We were in so much of a deficit for so many decades. Okay. Yeah, no, it's interesting, but it's important. We don't want to rely on anybody for anything. So yeah, so they use the jacks or different types of machinery to break the rock and pull the oil from the ground, and of course they have to process the rock and everything to extract any little bit of oil from there. And then the midstream companies come along, the energy transfer companies, and they transport the oil by pipeline. But pipeline, you can't have a pipeline connected to every single location. Like, it's impossible, right? Because it's expensive to build pipeline. You can't, it's like a railroad. You can't have a railroad come to your house. Like, you can only have it go to certain locations because you can only build railroad tracks in certain places. So pipeline may only go to like a certain part of New York State, for instance. And then all the trucks have to go to that section of New York State and drive the oil from the pipe. Because if there's a pipeline that goes from Texas to New York, then you just have to get a truck to that area of New York to bring it to New York City. And then the last part, like I said, the downstream is the refining and purifying and turning it into something of purpose. And then they sell it to the retail gas stations, the Sunocos and companies like that, and they sell it to us. Okay. How do we get on a tangent? Yeah, so it always seems undervalued, and they pay such a hefty dividend that it's maybe that's part of the reason it's undervalued, because if they used all their excess cash to grow the business, like these big technology companies do, like Meta's been doing, maybe they would be a lot bigger in market cap. But they have to give. It seems like they have to give a lot of back in dividends. But yeah, but I like it. I like midstream companies because they're safe. They're very needed. You always need to transport oil from one location to another. And there is some barriers to entry, because to transport most things, anybody can do it. I mean, of course, you need a license to do it, but anybody can transport, like furniture or clothing from one point to another. You just need a truck. Even food, which is a little more challenging to transport food, you just need a specialized truck that keep the food cold, right? But to transport oil, it's on another level. And it's very, very risky. If you get into a car accident, you can die. If you have a lot of oil in your truck. So yeah, it's mainly pipeline transportation, storage, and terminaling. Yeah, terminaling. I didn't mention terminaling for natural gas, crude oil, NGL. That's natural gas liquids, refined products, and LNG. It is organized. Okay, it was founded in '96 by Ray Davis, Kelsey Warren. So it owns 125,000 miles of pipeline for the U.S., making it the largest midstream company in the country. Do you guys know who the largest midstream company in the world is? I'll give you a hint. They're Canadian. Do you know? You guys know who's number one in the midstream space? If you're from Canada, I'm sure you know. Any chance? And I don't know if you guys know this, but ET owns all the Sunoco gas stations, the retail gas stations in the U.S. Sunoco LP. All the Sunoco gas stations outside the U.S. are owned by the Canadian company, the largest midstream company in the world. The one does anybody know who I'm talking about? They own 36% of the Dakota Access Pipeline. The problem is when you deal with oil, you generally have a lot of lawsuits, a lot of problems. That's the only setback for I wonder why. Let me redo this. Yeah, Enbridge. Yeah, exactly. Enbridge. I've done a lot of Enbridge videos. They're the largest midstream company in the world. But it's such a big dividend. Yeah, Enbridge. ET is number 3. But ET always has the most revenue. ET has so much more revenue than any other midstream company. Look at their revenue. It's almost the same amount as Enbridge and Enterprise combined, right? They have 78 billion of revenue. Enbridge is 32 billion. Enterprise is 49 billion. PAA. What's PAA? I know what that is. Plains All American. Look at how much revenue they have, 48 billion. And then market cap is only 11 or 12 billion. Plains. That's been getting hit pretty hard. 7.5% dividend. Did anybody know why is Plains going down so much? Which actually hasn't been going down. It's actually been going up the past few years. Look how low it was. It was under $10 just like 9 months ago. It's so undervalued. Why is it so undervalued? I guess they're just not profitable. They're Plains. Yeah, well, it's been going up a lot. Well, I guess oil was down a year ago, and it's been rebounding. Like Plains, it was $3 in 2020. Wow. That would have been a great time to buy it. Simply Wall Street has them at 26. Analyst forecast is where they're trading at pretty much. They're not profitable. I guess they have a lot of debt probably. Here's their revenue. So you can see it's gone up a ton from 20 billion to 50 billion. It's just their free cash flow is kind of low, I guess. 2 billion. It's probably not enough to pay the dividend. That's probably why it's going down. I wonder if their stock price, how it compares to ET. So it moves with ET, I guess. So in 5 years, Plains is down 30%, ET is flat. But they pay such a big dividend. So in 5 years, you probably got a 7 or 8% annual dividend. So you're still up, maybe up only a little bit on this though, but. Let's see against Brent crude. In 5 years, Brent crude is up 27%. I guess the same thing. If you built in the dividend payment, ET is probably up more than 27%. It's probably up like, they probably pay at least 7% annual dividend, and that's compounded. So it's probably up 40%. That's why commodities don't pay dividends. Like gold is just tracks the price of gold. They don't pay a dividend. So it's going to look like the chart just looks a little weird. When you look at commodity, it looks kind of usually fairly flat. It can't just constantly go up like a stock does. Like gold. Well, it was only $40 in 2005. It was that low. And it's trading pretty close to where it was in 2011. So you can see it does kind of go up over time, but it's not like a straight line like a good company goes up over time. It's going to be a little more steady and yeah. Really. But I can't believe gold was that low. $40 in 2005. I can't imagine that's right. Was it that low in 2005? But okay, 50 plus years. Any other tickers we should look at before I head off, or is that it? So crude was $30 in 2000. Yeah, I guess that's possible. And then it went to 140. That was during the Great Recession, 140. So that was the peak in 2008 for oil. Why in 2008? Like, why was oil? I know it was the Great Recession, and then it got really low. Not as low as it did in 2020 when it was like negative at one point. Yeah, so this company this company's interesting. MicroStrategy. So they actually had a net profit in 2023, a net profit. And the only reason they had a net profit was because they had an income tax benefit of $550 million. Because they had an operating loss of $115 million in 2023. Then operating loss of $1.3 billion in 2022. And the only reason they had such a big loss was they had an expense from the Bitcoin. Berkshire does on their income statement. It's very volatile net income. They did have a small loss in 2023, $115 million. But that's because so 2023, but they're gonna have a huge gain in 2024 from Bitcoin. From just the first quarter, it's up so much. So 2023, Bitcoin started at 17. And ended the year at 43. So just this quarter, the first quarter, it went from 43 to 68. So it went up 50%. So they're going to have a huge gain. Because what they do, the way it works is they have You see that their valuation allowance charge went up 500%, 400% in 2023. Okay. The change in the company's effective tax rate in 2023 compared to 2022, because you see their taxes went up 444%, was due to the release of the valuation allowance during 2023 on the company's deferred tax asset related to the impairment on its Bitcoin holdings, attributable to the increase in the market value of Bitcoin in 2023. So they have to post a valuation allowance, which is a potential loss on Bitcoin. But since Bitcoin went up so much, they released that valuation allowance onto their income statement, and they had to post through a big income tax benefit. Normally, they would have to pay taxes. So here it's like the price of Bitcoin when it goes up or down, they have to post. They have to carry deferred tax asset or deferred tax liability on that balance sheet. And you can see the digital asset impairments were 650 million. So that gave them a huge tax benefit. And that's why it looks like their net income is higher, even though if they actually sold the crypto, that cash would also be higher. But it's just a accounting thing. It's just a way to account for the swing in the price of the. But it happens on Berkshire Hathaway's income statement too. The swing in stock prices, like when Apple goes up and down a lot in a quarter or a year, it shows up on Berkshire's income statement. But that's why I say to everybody, just look at the statement of cash flows. You can see in 2023, they had a net profit of 400 million. That's mainly due to the taxes. And in 2022, they had a net loss of 1.5 billion. So it looks like 2022, they had a bad year. In 2023, they had a good year. Just looking at the net profit or loss, right? But when you look at operating cash flow, net cat, right here, operating cash flow, it's almost identical. I mean, it's pretty similar. They had a $3 million cash flow gain in 2022, 13 million in 2023. Because in 2022, Bitcoin went down a lot, so they had to pass through a big loss, 1.3 billion on their income statement, but they add it back here. But in 2023, they passed through that big income tax benefit when Bitcoin went up so much. And that was, they had to minus that out on the statement of cash flows because it's just accounting. If they actually sold the Bitcoin, then they could realize all these gains. It's kind of confusing. Even trying to explain it could get a little confusing. So, but okay, so I guess I'll sign off now. Not many people commenting, but yeah, I'll probably talk to you next week. Thanks for logging on. Okay. Yeah. Is there any other tickers? I haven't heard. Can you recap the Bitcoin segment? I was just talking about Bitcoin related to this company, not how this company, MicroStrategy, has just been buying Bitcoin over the years. They actually sold, $1 billion or $2 billion they issued $1 or $2 billion of debt, and they used that money to buy Bitcoin, which is just, and that's not what they do. They're not a Bitcoin mining company. So it's a little different from what I expect to see from normal. It's kind of like if like Meta or whatever, any company started buying Bitcoin. It's just like Meta operates Instagram and Facebook and sells ad space. This company sells like its app. It has technology that it licenses to other companies, or people use their software, but they just have been buying a ton of Bitcoin. And now they have 12.5 billion of Bitcoin on their balance sheet. It's a lot of Bitcoin. Okay, I'll be right back. 1 minute. They're a leveraged BTS proxy, though. Well, they are a leveraged BTS proxy, but like they're not like a Bitcoin mining company. That's why it's a little odd. I saw people talking on Twitter about shorting Bitcoin and long MicroStrategy as an arbitrage. But this company's stock price has gone up a ton the past few months, while Bitcoin is only up a little bit. Like this stock tripled like the last few months, which is, it was following Bitcoin almost perfectly for like 5 years. And then did somebody say oh, Volkswagen. That's a good German cars. Volkswagen. Okay, so they're in euros. Okay. We'll look at Volkswagen. 114.63. 6, 9, 12. Lots of. It seems pretty undervalued. Are you familiar with their history and the short squeeze? Volkswagen. So they peaked in 2021. They're down about 60% since 2021. The massive squeeze forced short sellers who had placed bets that VW would fall but the stock at a higher prices in a bid to cover the short squeeze. Volkswagen became the world's most valuable company as market cap rose to $370 billion in 2 days. Wow. What year was that? Oh, 2008. Shares of Volkswagen quadrupled in 2 days. I don't remember that. Wow. Yeah, that's during a Great Recession. (2008). I wish you can select the time frame instead of so it was right here. When did it go up so much? In 2008, they said, but it's an awesome story because the grandson of Porsche's founder was CEO of Volkswagen at the time. Well, so Volkswagen bought them instead of Porsche buying them. Okay, October 2008, shares of Volkswagen more than quadrupled in 2 days, making the automaker the most valuable company in the world. This has now been recorded as one of the largest short squeezes in modern history. It has been reported that hedge funds that had held short positions lost over $30 billion in Volkswagen short squeeze. Comparatively, GameStop short squeeze was estimated to cost short sellers $10 billion. So it was 3 times as more costly as GameStop. Oh, wow. Look at that. Sheesh. That's why with the line chart, you can't see the big, let me do FinViz. It might be easier to see it. How come okay? It's hard to. It's not. This is. It's showing me 2023, even though I put the dates. Okay, here's 2008 October. I don't know. It's just not picking up right, but I understand. Yeah, now that's crazy. So, however, much like GameStop, short squeeze, after shares of Volkswagen peaked, the price plunged 58% in 4 days. While short sellers may have been right long-term, risk management would not allow them to hold as the stock surged higher. They cut their losses and moved on. Within months, shares were down 70% from their top, giving away most of the short squeeze profits. Infinite short squeeze. March 2005, Porsche starts to buy Volkswagen stock. March 2007, Porsche's stake exceeds 30%. Then the short squeeze. Porsche stake exceeds 50%. Merger announcement in 2009. That's interesting. Yeah, I'm surprised I didn't hear that. Maybe I heard it once and forgot, but it's a good company. It's a good car, Volkswagen. They were founded under the Nazi Party, and then the Beetle is their most popular car. Remember the Beetle? Punch buggy. You punch somebody if you see a punch buggy. The group's biggest market is in China, which delivers 40% of its sales and profits. That could be risky. China's having problems now. It is name derived from German language, folks. Doesn't know. Yeah, the Italians and the Germans were worked together, definitely during World War II. That's interesting. Yeah, we own a VW. We got it in 2013. Okay. Sounds good. Well, thanks for commenting. I can't, Volkswagen, I forgot what model. It's a sporty car. My wife drives it. Well, what is it? It's a GTI. It's a GTI. Okay. Well, I'll talk to you later next weekend. Have a good week at work. See ya.